Hello, my friends. Today is February 24th, and as Pillow Investment Partner, just want you to meet our CIO, Alpha. And right now, there's a lot of things going on in the market, very volatile, and I have text message, and my friend asked what is going on. So let me turn this to Alpha. So Alpha, right now, what is going on? What is the hottest topic with the market right now?
Thanks, Sarah. Good morning, everyone. The biggest topic right now is obviously Russia attacking Ukraine. So depending on which front you're in, you will characterize it differently. But suffice it to say that Russian troops are now undertaking military operations against Ukraine. So that has riled the market. The market's very volatile right now. As we look here, the S&P 500 is about down 1.5%, 1.2%. So that's the biggest immediate concern of the market. And then the concern later will be around the response of the Federal Reserve to inflation. We may be able to talk about that later, but right now it's geopolitics front and center.
So what is the highest risk, the most impact that people anticipate and make the market fearful right now?
So right now, there are a couple of issues. Number one will be an impact on inflation. So Russia and Ukraine account for about 29% of global wheat exports, 19% of global corn export, and 80% of global sunflower exports. So that is big. Also, Russia accounts for a big percentage. I think it's about 40% of European natural gas imports. And also a big number, it's about 20%, I think, of oil. Don't quote me on the oil number, but it's a big percentage of European oil comes from Russia. So you see that Russia and Ukraine are big parts of energy and commodities.
Especially food, right?
Especially food.
People afraid of starving or not having enough.
Exactly. So that's the problem. So right now we've seen inflation in Europe go up a lot, based on energy and food, much more so than what we've seen here in the U.S. But those two impacts will continue to go up as this war reverberates across.
And this comes on top of inflation rate that already started, right? So I think even if it were me, I would feel fearful also that the food price already high and now it might get higher.
Yeah, so exactly. So the food prices have been very high. Inflation in the US has been about 7-point-something%. Sorry, inflation in Europe has been above 5%. So now chances are that this inflation is going to continue to go up. And the problem is, we can't cut down. I certainly can't cut down on my food consumption. So we can't cut down on food and gas. And so that has been an issue, and will continue to be an issue going forward. So when you are faced with inflation, there's only two things you can do: you either increase supply or lower demand.
Right.
As we have here at the back. So in terms of increasing supply, well, the Federal Reserve, the central bank of the U.S., cannot force people to increase energy supply, to increase oil production, to increase wheat production and stuff like that. They can't do that. So what are they going to do? Well, they will continue to increase rates. They will start increasing interest rates in order to lower demand, but you can't lower food demand. So therefore, inflation could be persistent, and we could go in an environment where we have high inflation and low GDP growth. And that's going to be a problem for the market.
And then you were earlier mentioning about this might also impact on China. Like,
yeah, so we're not geopolitical analysts, so the readers must beware, but we obviously have a geopolitical impact in the market to deal with. So here what happens is Russia, depending on what Putin wants to do, Russia has very aggressively taken over Ukraine. And this highlights the relative decline of the West, because the US and Europe have not been able to prevent Russia from attacking Ukraine. So number one, they've failed to do that. Now they're going to put some sanctions around Russia. And some of the sanctions include financial sanctions, maybe taking Russian banks out of the financial system and so on. But Russia has been preparing for this invasion for a while. And for example, in 2014, Russia attacked Crimea. And since then, they've taken their gold reserves almost more than tenfold to 2,000 tons. They've built their FX reserves to $600 billion, $650 billion. So Russia is well prepared to handle the sanctions. And then you bring in China. China actually, interestingly, China calls, so the Russian attack on Ukraine is called an invasion from the US side, but it's called a special military operation from the Chinese side. So you can see that China is more or less supportive of Russia. So certainly not criticizing them too harshly.
Right.
3 weeks ago, Putin and President Xi met before the Olympics, and they put together a statement highlighting support for each other. And now we're hearing that China has promised to buy more wheat and more oil from Russia.
Right.
So certainly there seems to be an alliance between China and Russia, where China is going to support Russia, or at least make U.S. and European sanctions on Russia. China will try to make them more bearable for the Russian side.
Right.
So that's number one. And then number two, China is probably going to read what kind of sanctions U.S. and Europe, the Americans and the Europeans will put against Russia, how tough those sanctions will be, because whatever those sanctions are, they're probably going to be much higher if China were to attack Taiwan. But definitely, for Russia to be able to attack Ukraine, despite the threat of U.S. sanctions and implementation of U.S. sanctions, means that Russia has been very confident. So therefore, China was probably going to be very confident as well.
So I guess for people, even for me, is always wondering, like, what is really a real benefit of Russia and China that trying to go against the West, or what is really a real benefits for them out of all these, creating the conflict, creating the volatility in the whole world, in all aspects, really?
Well, the volatility is a byproduct of the moves that Xi Jinping may do in the case of China, and Putin is doing. Putin is not trying to create volatility. He has a strategy, and for Russia, to be very, candid, the U.S. after the Cold War has provoked Russia by expanding NATO into the Eastern European territories, Eastern European countries. And so Russia doesn't feel very comfortable having NATO potentially, having Ukraine potentially part of NATO. So it is understandable that Russia feels a little bit angry about it. Now, what is not understandable is, to me anyway, is why Russia would attack. They might attack to preempt that. They might attack Ukraine for other reasons. But they're attacking very aggressively, and chances are that it's either going to be Crimea or Afghanistan. So if it's Crimea, Russia then will keep whatever they want of Ukraine, and then the world will just move on and have to accept it. But if it's Afghanistan and you have an insurgency level, well, the war in Afghanistan for Russia in the 80s lasted 8 years, and it ended up with Russia leaving Afghanistan in 1988 or 89, in the late 80s. So they lost that war, and some scholars are saying that it actually helped as well bring an end to the Soviet Union. So it's a strategic move to defend itself against a perceived risk for Russia. For China, it's a big if right now, but if they take over Taiwan, it is a nationalistic move to reunite China. but also a strategic move to control the semiconductor business, which underpins everything we do in the future.
Oh, seems like we are going to have a lot of volatility and geopolitical unrest for a while, which is really sad for people. But all these being said, what can the investor and what are we doing as an investor as well? I think this is always come down to what should we do with our money?
So we should remember a couple of things. Number one, for markets, for stock markets, geopolitics never matters until it does. The only geopolitical crisis that mattered was in the 70s with the oil embargo, because it struck at the heart of how the economy works. So I don't know if this crisis here will matter, but in the past it hasn't mattered. And 80% of the time, a year from now, a year from a geopolitical crisis, the market was up. So we have to keep that in mind. We have to accept the volatility in order to benefit from the upside. And then more importantly, we have to focus on discipline. Discipline is more important than conviction, because you control discipline, you control what you do. And so our discipline is first to be long-term investors. We don't try to trade the volatility. We try to be disciplined around our target weight. Every name in the portfolio has a target weight. So we determine whether we need to go back to target weight in terms of trading. We would trim a company that's above target to bring it back to target, and vice versa. So discipline is very important, and then having a long-term view, because nobody knows what. I mean, I certainly don't know what Putin thinks, and so we're just better off keeping a long-term view. Right now, the markets are down 12% year to date. In the past 40 years. The average correction has been 18%, so you could argue we're 2/3 there, but that's how we look at it.
Well, that being said, it's not that we are not in pain or
it's painful.
We are in pain, seeing me smiling, but actually inside it's like, sit tight, right? Sit tight, because sometimes we have to make a decision of doing nothing.
Yeah, it's actually important, Sarah. I think. You want to take deliberate decisions. Selling or buying have to be deliberate decisions, but also doing nothing has to be a deliberate decision. And Warren Buffett says his best thing is to be greedy when others are fearful, and fearful when others are greedy. He says that he would have done much better if he hadn't sold any stock over his career. So if you pick a good quality company, just stick with it through thick and thin. Just stick with it.
Yes, and the other thing that we do actually right now is we trying to have a one-on-one meeting as well with our clients. If you are our clients, Pillow Investment Partner clients, you know that we already sent out the message that we are going to be sitting with you one-on-one, answer all your questions about the portfolio, and we're just trying to make sure that people who work with us are at ease as much as we could help. And yeah, we're here to help. If you have any question and you want to discuss more, put in the comments below, and then we'll come and answer your question. You are not alone. We are in it together for a long run. All right, well, we'll pop up again. We did not think that we're going to show up this quickly, because Alpha always like, oh, it's good that we don't have to say anything that often, but God has sent us the event that we feel like we should show up. So I hope you are doing great, and have a great week. Bye.